Okay. Looking pretty good. Bitcoin looking pretty good. Clear high tide flag. Perfect bounce off the 10 EMA today. It's getting bought up. It's getting bought up below it. Same exact pattern. There's your high tight right there. Boom. Don't even need the moving average to tell you. So your support there on the prior flag in April at 27. Nice pop. Resistance from April to now. Nice descending channel. No reason to buy. I guess you could buy for bounces and short it. Buy, short, buy, short, buy. Couple inside days, you like to see it. Volume drying up. There's no volume, which means there are no sellers. Look at that. Look how small the volume is. Preceded by a massive breakout. Same thing here. Not much vol. Anemic volume, and then big sell-off day. Big move. So when it's breaking out of a channel, this was your clear resistance right here. Here's your breakout. So how do you know that it's not going to be a false breakout? This is where I buy. Breaking out. And then it goes. You sell it on the high, or you buy it on the high. You could also have a tighter stop loss and buy it there. As it's coming down to test key level of significance, you hone in on the 30 or 15 minute. Look how it's reacting. So June 20th. June 20th. When you've got BTC. This is where we're honing in. BTC USD. June 20th. that's a nice high tide flag. What nice price action on this thing. Sheesh. Boom. There's your flag. Easy. Resistance, flip to support, flirting with the line and goes. Another nice one here. Okay, so here we are. We're here on the 20th. This is how you buy high and sell low. Buy low and sell high, I guess. It's the 20th. You see it here. The 19th gave you a clue. Okay. Nice flag here. $25.6. Was 25,600. Breaks out. Classic. I bet you the volume fell off too. On this consolidation. Yeah, there you go. Anemic means no sellers. You can see your key level of significance being 26.4. See this? It's resistance here on the 30. Serves as support. Look at all these wicks here. Support, 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 26.4. Support. It's flirting with it. And then it goes. More flagging. It goes. Consolidates again. More flagging. More flagging. Nice and tight. No sellers. Okay. Was this your Friday sell-off? Yes. On some nonsense news. Consolidating in a tight range. This is going to be a big move here. Whether it sells off or it runs. I have more of a bullish bias on it right now. Look at the 4 hour. I mean, this looks very bullish. $31,000. And this is your channel. 30K. You get it even tighter here. $37 or $38, I guess. What's this close here? That's 39. Try this at 38,000. Okay. Yeah, and you have your topping wick here. Go so far as to put another line there, 29.8. To make up your demand zone. This is your support area. Now it's range bound. Nothing to trade. If you're trading short term, I guess you could buy it on little wicks under 30. You can see your daily volume. It's the weekend too, so I guess every weekend it dries up. Yeah. This looks good. Take a look at MicroStrategy. And what a beautiful cup. Just absolutely gorgeous. Clear uptrend. Bottom, higher low, higher low. Clear support here, 270. 265 to 270 support. And this is just beautiful. And look at your high here, 3045. You've got highs here in the same range. Now you're at the top of your range again. Yep, and you've got supply here. So this will be it won't break, I don't think it breaks out of this range unless Bitcoin moves up to the next level. You have plenty of supply. Trapped sellers are selling. You go again, key levels of significance. This entire area. I'm going to drop in an anchored VWAP to the bottom. Drop one into the local high. Have one from the ultimate bottom. Okay. Perfect respect of your bottom AV WAP. Perfect bounce of your local high AV WAP. I'm gonna guess one of our moving averages is gonna be in this area. Perfect bounce. What a setup! What a setup here. Really nice. Look at that. You can see your pullback. Perfect bounce off the local highs AV WAP. And then it's been riding the 10 EMA. Inside day. And whatever fluff news came out on Friday. Look at this perfect bounce off the 10. I mean, you just can't make this shit up. You can't make it up. 322.86, the low 322.26. Local highs AV WAP. Clear resistance. It's your trading range here for a month. Sellers step in. Resistance, 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 resistance. Resistance flip. To support on the test. And go. I mean, this just happens across every chart. Every chart out there, this happens. Crazy. Okay. Going into hut next. What a, I mean, it's just beautiful. Beautiful accumulation since the beginning of January. Truly, it's beautiful. And just riding the trend line, start of a new trend, pulls back, finds support, respects the trend line. Little VCP action here. One low, second low, higher low, third low, boom. Add the 21 EMA onto this. E1321. Okay. And there you go again. Again with the same reliable setup each time. All reliable. It's definitely got a tighter EMA that it's riding there. Probably the 8 is my guess. It's an 8 DMA. Serving just as well, not better. On the 8. Okay. I mean, you can see it perfectly. $2.95. It's clean too. This kind of setup just happening over and over across stocks, crypto. I mean, it's crazy. Just it doesn't get any easier. This would be the one single pattern I would trade for the rest of my life. Like if there was one single pattern to trade. This high tide flag. I mean, it's just clear support on the way up, consolidation, catch up, and it goes. It has to either squeeze down or go. Take a look at this volume. Big move, comes down on volume. Lowest volume before the breakout. Nobody selling, and go. Okay, pattern recognition. Ripe for breakout. SPXC. Have my eye on. Look at all these inside candles. Boom, boom, boom. Consolidate, breakout again. I think there's portfolio rebalancing here. Look at the earnings, 81. They have a big beat. Massive acceleration in earnings. You have a beat here. Revenue is down a little bit quarter over quarter. But from last year, it's up massive. Strong stock. Flagging. Here's your resistance. It's a nice setup. This is a nice setup for the next leg higher. Take a look at the 10 EMA. Okay. Look how it rides it. No volume on this sell-off. None. Rides the 10, rides the 10, rides the 10. Pulls back to the 10. Little profit taking. Found support at the 10. Undercuts. Definitely shook some people out, I'm sure. 20 DMA. Okay, so this stock likes to use the 21 support. Okay, you have clear level of significance here. You can see where this closes or the open. 81.18. What's your low? 81. Bounces off the 21 EMA. Massive volume on portfolio rebalancing last week. Riding again. Getting ready to break out. A plus. A plus setup. Mer Group, construction and engineering. I mean, just look at this. The 124 area here. $124. Sells off big time into earnings. Okay. This was super tight. Look at this. Wow. $21 EMA. And now setting up again. Nice setup. It's a resistance flip. Resistance. It flipped it to support, broke down, tested as resistance, found support at the 21 EMA. Support, resistance, brief undercut on minuscule volume. Shaking people out. Big shakeout. Pops back to resistance. Where's your 50? There's your 50. Doesn't close below. Super tight range. Now volume increase back over resistance. What you want to see tomorrow or Wednesday? A quick test and go higher, or come back down to 21 to the 20 EMA, touch it and go, and then close over this 137 area. It's a nice setup. AEHR. This got sold off hard on Friday. So what is this support here at the beginning of the new trend? It is your anchored VWAP from July of last year, the very beginning of the trend. We had massive support at $7. Just look at these earnings. So they're growing. This is your support the entire time. Sells off. Boom. Briefly undercuts. Massive volume post earnings. Comes all the way back down. This is a perfect bounce. Can't make this shit up. Boom. Setting up again, potentially. We'll see how this reacts. If it just starts going, that's where I buy tomorrow. If it pulls back, for me, it's worth a buy here at the 20. We'll see how it reacts at the 20 on EMA. A-tier setup. Absolutely beautiful. Okay, so I had gone through earlier GWW, Align, Constellation, Weave, still my favorite. I mean, this is just, whew, it doesn't get better. I went through Redfin. EXPI. Same exact thing. Very clean. I mean, this is just. This is how you make money. Holy. Look at this. All of these Redfin, Weave, Constellation, Align, GWW. Same exact setup. The high tide flag. It's just. This is literally all you need to know. One of my favorite setups. You've got your cross here, signaling potential end of the downtrend. When you see your 8 and your 21 crossing, became clear what was going to happen. The way it happened on the uptrends as well in the past, boom. A little inverted head and shoulders. Left shoulder, head, right shoulder. A bit of a deeper right shoulder, okay. It goes from 10 to 18, almost a double. Respecting the 8. Respecting the 8. Respecting the 8. It's a blow off top. Closes below and then it retests as resistance. Time to sell. Get out. 8 and 21 EMA cross the 50 DMA. Big volume surge. High tight. Awesome. You could see it even here more so. This became your support. You see your high here. This was resistance. Try to push through, came back down. 1308 high, 1308, 1307. And then it flips. Your low, 1314, 1309 close, 1312 low, 3 higher lows. And you have a base here. I mean, you can see the base forming. Your resistance right there. This is your base. High tide flag rides the 8. Sets up another flag. Breaks out. Comes down and tests. I wouldn't play it anymore. This is where the life-changing money's at. Riding the 8 the entire way. AON. It's another clean stock. See how it trades in the past. very choppy before. I hate chop. I mean, just how do you trade this? It's impossible to trade. Suppose you can see the higher low, the higher low, higher low, higher low, but this is just... As it uptrends, respecting the 8 EMA, little shakeout here, respecting the 8 EMA, loses it, downtrend, liquidity grab, bull trap here, flushes, just riding the 8 EMA. Riding the 8 EMA, perfect setup again. High tight flag. Same as the others. You can see this is a horizontal line of significance. You've got a low here, flip to resistance. It's an open slash close. What was this? Close here, low here. What is this level? Guess this 328-ish area. Nice rounding bottom. Here's a low, here's a higher low. Runs, consolidates, clear resistance. So you could even bring this down more. Tightens up 15th to the 28th, respecting the 8, and pop. Overstock. Darling stock now. You could just use your anchored VWAP from the low of this trend. Yeah, and I mean, look at this. This is where the buyers are coming in. I mean, look at this. You can't make this up. 18 low of 1713, 1718, 1712, 1720. Never closes below 17.5. Look at that again. Here's your low. Identifying areas like this make for the, in my opinion, even better trades, or just as good as buying support with a tight stop or within the tight area of a high tight flag. Look at this. This is another key. Level 20. Got a low here, close here, close here. Open here, high here, low here. Just training to see these key areas just made an absolute world of difference in my trading. What a base. What a base. $20 DMA curling. 10 EMA respect. Bet you the 50s curling. There you go. UFPI, another high tight. And just look at this. Awesome setup, man. Another high tide flag. Let's see. Right into the 10 EMA again. Every time. You just got to find these setups, look at the earnings, and that's it. It's done. 90-50 resistance flip here. Look at that. Clean. Unbelievably clean. Riley. This is one I got in and it finally popped. I got in early last week. It's another one, clean rider. It's an 8 EMA clean rider. Both up and down. You can see it here during the downtrend. 8 EMA is your resistance. Once it breaks over, look at this. Strong earnings. Nice little shakeout here. I bet you it's around the 20 where it bounces. There you go. 21 EMA, perfect bounce, nice shakeout. Rides it up. Cleared level of resistance setting up. This was your resistance and it breaks out. This was your flip. You have some distribution going on here. Flushes on volume. Retests as resistance and flushes. Loses the AVWAP on the bottom of the trend. It's a instant flip from support, potential support, into resistance, resistance, resistance. Finally breaks through, flips resistance into support, and then recaptures moving averages. Sets this up. This is portfolio rebalancing day. Look at this volume on these red days. Look at this. There's no supply coming to the market. None. There are no sellers. Just look at that. Look how that's the lowest volume in months. On Thursday. And another setup. Look at this. Once it recaptured, it never, not even once, does it close below the 10 EMA. Not even once. And you can see, because from past trading, again, that's the personality of the stock. This is just, it's free. It's there for the taking. Training over and over and over. The ability to see these. Once your 8 crossed the 21, it was done. Once your 8 crossed the 21, clear downtrend, resistance the whole way. There's no reason to be touching this. It crosses. Good earnings. That's your AVWAP, not too significant. Okay, so you get a gap up into earnings, 11% day. You've got clear resistance here at 304. 3045. And look at this. Your high here, 304.84, ends up being your bounce zone on the flip. Guess you could say your resistance is 305. 305. Again, tight trading here. So there's a squeeze here. Has to either break down imminently or go up, and it breaks out. Pulls back in. Finds support. Not once do you see it close below the 21 EMA. Not once. Closes right on it. Shakes out weak hands. Shakes them out. Shake them out again. Another shakeout. And then now it rides. And again, with this tight trading, into the 8. You can buy these all day long. Pretty low ADR though. 2%. Yeah. This is an incredible move. Look at this. Respecting the 8 the entire way. Always bought up. Always bought up. Always bought up. Respecting the 8. Into earnings. Boom. Bounce off the 8. Tight trading into the 8. Breaks out. Comes back in. Tight trading again into the 8. Little cup and handle. Right here. Cup. Handle. Go. Into the 8 and breakout. TMHC. Welcome, David. This is choppy. I don't like it as much, and I don't think your ADR is pretty low. This one doesn't respect the 10 as much. Might be a 50 rider. Okay. More pattern recognition. So what is this doing here? Got a base, clear base. Trading below your 21 EMA. No reason to be buying this entire way down. Recaptures, you still have a declining 50. Not an ideal entry. Coming into earnings, I don't like buying or playing around earnings. Now your 50 is curling. And I like to always check past uptrends to see what line, what moving average it's respecting. So again, on a previous drawdown, here it is. It's your 20. Here's your 20. On the way up, I guess it's the 21, excuse me, 21 EMA. Okay. Riding the 20 all the way up since October lows. Always bought up at the 50 when it breaks, when it comes down. You can see here on these declines, look at this volume. Boom, boom, boom. No sellers. Not many. Pops into earnings, good earnings. Respects your 20. Still goes. Sets up a double bottom. Now we're trading in a range and it's breaking out again. It doesn't really respect the 10 much. Nice trading range here though. Breakout day on Friday. Elf. This was a beautiful, beautiful setup. All right, this goes up here with Redfin, EXPI. Let's go with A plus versus A. What? Okay. Getting some lag. Elf. Beauty. I mean, what an uptrend. Clear respect for the 50. Want to see this on the weekly first before diving in. Yep. I mean, look at that. Holy. It's a 6Xer, 5.5 bagger in a year. Imagine you have leaps on that. Could even analyze this on the weekly to start. Yep, so from the past, you can see it's riding the 20. It has a habit of riding the 21 EMA. Riding, breaks down as it has resistance. Little mini base here. And then here's your flag. Again, same pattern over and over. Resistance flip, breaks out, does it again. Perfect bounce off the 20. 1 EMA. Again, 74 area, 73 area, zero resistance. Flips, runs. Okay. One of the strongest stocks in the market, that's for sure. All-time high after all-time high. Okay, so how do we look at this here on the daily? This is a clear trend line coming down. Guess how tight do you want it? I guess you would have it here. This is on log scale. Nice setup. You can see it sets up a little cup and handle, breaks it down. But it's definitely respecting the 20, might even be respecting the 10 on the way up. Yeah. Aggressive uptrend all through March, respects the 8, breaks down, sets up a cup and handle, gets rejected into earnings. I've seen that a lot lately. The last or the 3 or 4 days into earnings, there's sell-offs, and then on a beat and or nice guidance, it's a huge pop, and they shake out a ton of weak hands. Okay. There you go. Big pop on earnings. Huge volume. 20% day. Starts setting up the high tight. Clear support here. 103 area slash the 10 EMA. Sells off. Perfect bounce off the 21. Recaptures and goes. Now all-time high again. This is your clear resistance. False breakout. This is why I don't like buying on what seems like it's going to be a breakout or buying above the breakout line. Because then you get shaken out if you set your stop at the low of the day or below the low of the day. I much rather, knowing how this stock trades in uptrends, it more often than not respects the 20 from the past trading that we saw before. The 8 is just a bonus. Or the 10, excuse me. Perfect bounce off this 20. I mean, look at this. It's a perfect bounce. take a quick look at our anchored VWAP from earnings. Yep. There you go. So this is what it was respecting. Not the 10 as much, but this is a perfect AVWAP squeeze right here. Look at this. Gets bought up, makes a go, rejected, gets bought again and again. Breaks down, finds support at the 20. Nice green day, bounces, finds support now. You've got the AVWAP flip. It was a very short support to resistance flip. Flips back, tests support again, breaks out. Perfect retest and flip from resistance to support. Goes and massive volume. AON. This is another beauty. Absolute beauty. And it's so clean. It's so clean. And you can see when you go back that this 334 area is a key level of horizontal significance. Look at this. $334. What does this tell us about supply and demand? It means you have a bunch of buyers here that were trapped. They wrote it down, excuse me. Sell it, so there's going to be selling. They want to get out of break even. And look at this. Beautiful, beautiful cup. See if it's got any 10 EMA. Yeah, it has 10 EMA support. Let's take a quick look at a VWAP from the local bottom. Not really relevant. Local high. Not too relevant. Okay. Beautiful cup. It's a little mini VCP here. I guess more so a cup and handle because you don't have a third impulse wave. You can consider this your cup, and this entire thing would be your handle. While at the same time, I suppose on its own, it's a high tide flag, no? You've got your cross here. In the past, again, when the 10 EMA crosses your 20, constructive action to the upside. 10 EMA crosses the 20, constructive action to the upside. 10 EMA crosses the 21, excuse me. It's going to have clear resistance, sell off, sell off, sell off. And from a broader picture standpoint, it's just creating a massive base. Resistance, resistance, resistance. High tide flag, could consider this on its own a cup and handle. Super clean, respecting the 10 EMA. You just buy it in here. Instead of buying here, which I think is the traditional swing trade sort of practice, again, I much rather buy it here. So identifying within the high tide flag where the actual support and resist, or where the support is. within the smaller high tide flag. So look, you've got this area here at 330. Close at 330, wicks below, gets bought up under 330. 330 area bounces, wicks below, closes over 330. I'd much rather buy in here with a stop on a close below the 8 DMA. Right, so it would be something like sorry for this lag. I'm on a laptop. Got rid of this. Looking for, here we are. I'd much rather enter somewhere in this range, this 330 to 332 range, with a stop loss on a close below the 8. Right? And look, you see we've got one low here, got a higher low here. Could even have it do something like this. Stop there. And then you always want to check your ADR. It's got extremely low ADR. I try to keep my risk reward. Don't know how, you never know how high it's going to go, but I try to keep my my stop loss risk to 50% or less of the ADR. But again, I mean, this is just A+. A+, respecting a clear moving average. Resistance is clear. Cup and handle, high tide flag, part of a much larger base. Breaks out. I mean, this is catching these kinds of moves, man. This is why I don't like to day trade. I'd much rather be in positions like this, where I'm just riding the wave. Overstock. Recent darling. Massive move. I think I went over this briefly earlier. So clear downtrend. No reason to buy, but look at this. All year, not a single sub 1750 close. Not once. Perfect bounce. That's a strong hammer. I would have bought it even at the close. Just off that alone. If we're looking at the stock back then. Wicking below 1750 over and over. Bounce hard. Bounce into resistance. Bounce again. Clear base. This time, I think the best indicator for support was the bottom AVWAP. Look at this. And you can't make it up. Look how close and look how tight this is. Perfect bounce off a VWAP and the base. Resistance to support flip. Look at this. Resistance, 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 resistance. Breaks through. Dips below. Shakeout on minuscule volume, relative volume. 900K. Nobody's selling. It's a perfect shakeout. Nobody is selling here. Buyers step in on double the volume. Again, another 50% increase. See how it interacts with our 10 EMA. Little shaky because you've got to close here below it. 21. Yeah, 21 it's respected. But I think your AVWAP was a bit tighter. Look at this. Recaptured the 20. Nice setup here. Typically, I would expect, I mean, this was must have been some kind of Bed Bath & Beyond announcement that day. But typically, you would expect 2 to 4 more candles in here with your volume massively drying up. Just like the other setups. Low volume candle, low volume candle, low volume candle, breakout day, and then go. This time was just pure aggressive breakout. And you can see on these pullbacks, look at this volume drying up. Relatively speaking, these are not people taking, these are day traders and smaller traders taking profit. These are not institutions necessarily selling. Low volume, low volume. Buyers back in control and boom. 10 EMA here. Perfect bounce. You can see the low of the day is your open here. 22.31 open, 22.39. Your high here, 22.45. So in that area, a perfect bounce off the 8, tightens up and goes. And to me, that's an A+ setup. UFPI I did earlier. Again, classic. This is what I meant by overstock went before the rubber meets the road and it gets that nice close to or shakeout bounce where it briefly goes below or bounces off. Overstock just went. So it went early on some kind of news. Look at this consolidation, high tide flag. Respecting the 8. Clearly buyers, look at this 88 resistance as it's coming up. Flips. Buyers are stepping in under 88. Wick below, bought up. Wick below, bought up. Wick below, bought up. Comes down, touches. Didn't a single time close below 88. Touches your 10 EMA, clear support, boom. So this gets upgraded to A+. Can update this to A+. O'Reilly was A+. There's your base. I was in this. Boom. Respecting the 8. Past price action. Again with O'Reilly. Respecting the 8 all the way. Shake out at the 20. Nice bounce. It's your mini base setting up here. Look at this. Oh, you even have a VCP here if you look closely. 3 lower lows, 1 contraction, 2 contraction, 3. Going to the half day, I think we can see it a little clearer. Yeah, there's your VCP. Look at this. On the half day, 195 minutes is a perfect one half day chart instead of a 4-hour chart. Look at this. 1 contraction, 2 contraction, 3, go. A plus. Intuitive was an A. We did TM8. Okay. New ticker, Amphmol. Okay. Next stock. APH. 10 EMA. Yeah, there's some respect there. It's fairly clean. Okay. Start at the 20. Excuse me, start at the weekly. It's a massive base. At the 66 area. Okay. Here's a weekly example of that high tide flag again. It's pretty much the only setup you need. One low, second low, third low. That's 74. All these buyers defending 74. So look at this. Tap, 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 tap. Wick below, I'm sure it shook out plenty of people. Tap, tap, tap. Not a single close below. One low, higher low yet again. Let's see how any of our moving averages come into play. No, no, no. This might be a 50 rider. It's just starting to curl. Going to the daily. Reset our chart view. I think our ADR is pretty low. I don't like trading low ADR stocks as much because they just don't move. I want the movers and the shakers. Give me 5% plus ADR and I'm in. Okay, let's see these earnings. 78,323. Should put in the earnings dashboard. We'll do it later, but this is a clear massive base after a big run. It's a 10 EMA clean rider. And it has a history of being so. Both up and down. Look at this, all the way dating to last year. Clean rider. On the way up, on the way down, on the way up. Looks like a little distribution here. Comes down, finds support. It's choppy. On the way down. Not as relevant here. I guess it's... Could consider it resistance for this short amount of time while it's basing. Not really. On the way up, it has a history. Again, you have a hammer candle here pushing off of this support area. There's a hammer here as well, and it ran. And that's your clear resistance before it popped. There's your resistance, or your resistance to support flip. Keeps going. Undercuts on volume. Then that's when we bring in our 21 EMA. And not once does it even touch it. There's a clear bounce here, though, at 80. You can see a close here as well. Near 80. That would be 80. Okay. I'm sure plenty got shaken out here. Recaptures, especially going into a weekend. Oh boy. Recaptures, bounces. And that was all she wrote. But for the most part, I mean, it just respects the 8 like it did in all its previous runs. Not as much of a tight setup like the others. I don't even think this is 8 here. Builder. I mean, this is just... These home builders and construction / engineering companies have been on a ridiculous tear. This is not a 10 EMA rider, it's a 21 EMA. Just clean. Another setup there. Easy resistance flips to support and it goes. It's another key area, 114 area. The resistance flipped it, came down, undercut on volume, but this entire way up, it's pretty much been... See if the 20 might be even tighter. No. Relative strength, I'm sure, is crazy. Yeah, 97 relative strength. I mean, this is an 8 tier, I think, because it's so dependable with its support. Anchored VWAP from the earnings. I can see a couple closes and interactions with it, but got a bounce here. Respect comes down, undercuts, 20 support. Recaptures, bounces, closes over. Got a bounce off the AVWAP and the 20. It's another key area here. Look at all these bounces. Got resistance, it flips, bounce, 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 loses it, comes back, closes just below. It's a flip. All these bounces here at this 120 level. 122 is it? It's 120. I'll take that horizontal array. $120. Look at that. Okay. I think that's an A tier with how dependable it is, and it's not super choppy in relation to the key moving average that it's riding. Doesn't undercut it much. Here's an undercut. Get a bullish Harami though. It's inside day. And you have your clear resistance here. Okay. Lico. Oh, I like this one. I like this one. I think you can be even more aggressive on this horizontal resistance line. This is a tight, tight, tight flag. I'll put this in at 170. Again, same pattern as all the A+ setups. Just look at that. I mean, it doesn't get any more picture perfect. Perfect flag. Tight. Found support, found support, found support, found support again and again and again. Finally breaks, killing all these short-term options after earnings as well. Yeah, nice beats. All the gambling short-term options players, unless they were savvy enough to sort of buy this area and sell into resistance. We're getting decimated. I mean, this is perfect. Boom. That squeeze. See any 10 EMA reactions. It does ride it. I'm sure an 8 or a 5 EMA, it's riding even closer. And look at it's the 50. Okay. I like this setup a lot. This is a beauty. I mean, this is where I've seen the most success in trading ever. Is once you're able to recognize these patterns like this and just how freaking repeatable they are. And you can take better entries at support or an identified support instead of buying the breakout. I'd much rather be buying the support and holding tight. And boom. And then a close below. I think this even has a cup and handle here. Here's your cup with a handle. That's even a mini VCP, no? You have 3 contractions. 1, 2, 3. Let's look into the half day. I mean, this is a beauty. Absolute beauty. Perfect. Let's go into Vista. It's a massive flag forming. Did some work on this before. But again, same kind of thing. Where you've got your 21 EMA ride. Some choppiness down there. Let's see what the 50 interactions are. Guess you have a bounce here, undercuts. Okay. But when you remove this, look at this. Perfect. In inverse head and shoulders even, I guess you could say. You probably have to go on a lower time frame. Not really. Clear base though. Look at this. Here's your close. Turns into resistance. Resistance. Here's the flip. Bounce again. It bounces again. And then it finally goes. This is a nice buy here on the pullback. Hammer candle. Minuscule relative volume. It's nice. ADR I think is quite low though. Yeah. Less than 2% ADR. Okay. I'm gonna look at MUSA. Again, I looked at this last night. Clear level of significance here. Let's first take a look at our EMA. Start with the 10. Look at the 20. Versus the 21. I think your 21 is a bit tighter. Look at this setup here. Start on the weekly. Always giving clues. Always. These charts are always kind enough to give clues as to what's to come on these weekly and monthlies. Just have to look. Look at that base. Wow. Thing of beauty. Big breakout. Okay, so this is a 21 EMA rider. Got the 50 there too. Interesting. That's interesting that it was undercut. You can see as well from past performance, it's a 21 EMA rider. So look at this, 50 and 21. On the way up, bounce, breaks down, bounces off the 50, bounces off the 21, bounce again, support, breaks down, sets up a new base. Now it's got both. I mean, just look at these perfect bounces. This is just, you've got double support here. Bounce, undercut, and finishes way above. Bounce, bounce. This 290 level looks like resistance on the weekly. Look at that here. Interaction. 290 to 292. Got this 290 resistance breaks through. This 290 to 292 area again. Right here, right here. This is 290, 290, 290. Open, 290 area, close 292. Bounce off just below the 290. So key level, I think 290 to 292. You can see these are curling up. This is the kind of stuff I want to see in stocks that I'm taking long swings on. Let's throw in an anchored VWAP, see if there's any significance. Any no, you have a bounce here, bounce here, bounce here. Not really relevant for the last couple months. Let's put one in on the earnings. Not really. It's pretty much your 21 EMA. Bounce, resistance. And this is your 50, so it's choppy here. Once it crosses, here's your bounce, here's your bounce, here's your bounce. Bounce, bounce, bounce. Getting a bit weak, undercuts. There's just a ton of interaction with this. You can see how low the vol is too. 250, 250, 230. Double vol. 50% of these 2 days vol. Boom, boom, boom. I think you can see here too, this 293 on the daily. Put in a horizontal array, you can see it right there. This area, it's setting up again, just like the others. Not as much of like a clean flag, but you can see this base. You see this lower, here's your low, higher lows again, higher lows again. Boom. This is the area I like to buy in. If you're really zooming in, you can see here, what is this, 288.75. Plenty of buyers in this area. And then a close below it. You're going to have a very tight stop. Could have like a 286 stop. 286. A close below 286. If you're buying it here. Say max of 289. Say it's 289. You buy it. Your stop is a close at 286. Your ADR is 2.32%. So it falls within the range. Looks like that would be, yeah, it's about 50% of the ADR. It's not bad, or less. Microchip. To get rid of some of this noise. Keep it simple. Pretty choppy, definite distribution. All this choppiness. Clear base setting up though. Comes down, volume decreasing. I think this would be a pretty spec. Yeah, I guess in the past you can see bounces off the 20 or respect for the 20. Yeah, bounce here, testing here. Resistance, 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 resistance. Choppy. Not as. I guess I would be a buyer on a flip of this base. And then as it goes, you could buy with a stop below, on a close below the base. I'd probably take a third or a fourth position size on a speculative buy, like I did with Oracle. I don't think Oracle's on this list though, but I did post it on Twitter. I spec bought this 20. It's a super slow mover, so it's not the best. Well, I guess your ADR is picking up recently, but you've got a gap up, so it doesn't count. I don't take as much weight in it. Look how tight this is. Tight, tight, tight. Nice setup. Awesome earnings. Great guidance. Tightens up here. Breaks out. This is why I speculatively bought a full-size position here on Thursday. Got a fill at 1485, I think was my fill. And I nailed it. The low was 1463. With a stop below here, the low of this day. Because this gap is serving as support, this earnings gap. But clear 21 support, 21 EMA support. Respect. Bounce here in the past, bounce here. Tightening up, bounces, bounces again. Nice setup into earnings. And what I noted on Twitter was look how quickly this volume decreases. This is your earnings AVWAP and your relative and your all-time high AVWAP. Look at this massive increase in volume post-earnings. Falls off a cliff. And I bought it there. 1485. And your risk is, I mean, that's one of the better trades from a risk reward standpoint. 114.85. My stop loss was, let me look at my notes here, was at 14. I put it in at 14, 114. I like nice round numbers. Excuse me, 114. And I didn't have a real price target. But I guess you could say this VWAP turned from support into resistance. I haven't sold any of it yet. So this AVWAP would be 120.18. 120.18. But pretty clear areas. I mean, look at this perfect rejection and furthermore push down beneath. On volume too. So we'll see how this acts. I'll be looking to de-risk first thing tomorrow. And sell at least a third. But that was a nice one. Lumber. Clean. So clean by way of how it interacts with its 21 EMA. Unbelievably clean. Just look at that on the downturn. Support here, flushes, rejection, 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 over and over. Recaptures. It flushes and they push it up to close there. Rejection. It's a fake breakout, a fake out. Rejection, rejection. Actual flip here. Comes down and boom. Sets up. Let's see if there's any 10 EMA. Not really. I guess it's riding it, but it does undercut a bit. 21 is your old reliable on this stock. This was a nice setup. It didn't do as much tightening up as I would have liked. I would loved to see 2 more candles here. No volume. Buyers couldn't wait, I guess. Dried up volume day here. Dried up volume day here with the big breakout. MDB. I've been playing this like a fiddle. So now we've got a few gap up plays. This had a nice bounce off the 21 EMA. Really nice earnings, massive gap up. Clear support. This is your gap support. Undercuts. I'm sure this took people out. I hadn't been playing it yet. I guess you could put a line there. What is this? 366.11, 365, 367.6, 365.11. So I guess your ultimate bottom here should be 365. Okay. This was interesting lately. Let's see the 8. I bet you the 8 is like this. Or the 10, excuse me. Yeah, there you go. Was waiting for the 8 to catch up. Even all the way here, it never once, since recapturing from this point, closed below the 8 even once. Undercuts, recaptures, undercuts, recaptures, undercuts, recaptures. Waiting for moving averages to catch up. Take a look on the half daily. Was doing some work on this recently. Look at that. That's a nice support. Bounce, bounce, bounce. Undercuts. Gets bought up. Shakes hands out. Bounce, bounce, bounce again. Closes over. Now your 20's caught up on the half day. Undercuts again. But if you've noted that what your low is here, you don't get shaken out if your stop is below that. 365.10, 365.07 low. And here's the setup on the smaller time frame. Let's try the 8 DMA here. There you go. This 10 EMA is a bit wonky on the smaller time frames. I think I have to find another indicator. Another 10 EMA indicator. Here's your high, here's your resistance. Look at that all the way through. If you go back, resistance doesn't close over it. I traded this past week on the flag, and calls paid off nicely. So how did we play it? Or how did I play it, excuse me? Clear resistance here. Look at that. Boom. I didn't buy this candle. I think wasn't looking at it at the time. Came down, bounced. Bottom tick. 380.50 or 450 cents. $400.50. Bounces again 450. Closes over 450. New area of significance on this close. I want to pay attention to. Recaptures 30 minutes later. Look at that. Another. Then you have your bounce here off this closed line. Algos bounce it here. They bounce it again. And I bought it here. I bought it perfectly at 380.50 with calls. My stop was here below this low, or this was my exact stop, mental stop. Came down, bounced once again off this level, third time here. Or you've got it. You've got to close, you've got to bounce, you've got to bounce off this 398.75 level. Puts in a hammer. Nice strong close. Gapped up and I sold it on Friday. Flagging again, potentially. I didn't take it. But I'll be looking at this week. So on a rollover, I'd be looking to scoop some up again at 450 cents, depending on how it's interacting with it. Gap up play. This has been my biggest winner this year. Just unbelievable strength. Unreal strength. Okay. Getting rid of the noise. I charted this to death. Cup and handle. I was in before earnings. Look at this nice support here. Bounce, 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 bounce here, 355 area. Let me pull up the Twitter history. This has just been a phenomenal, phenomenal winner for me. ATI. Let me pull up. I have to replace an indicator to pull up the earnings dashboard. Okay. Fairly liquid, smaller market cap. Okay. All right. Top down. I always go top down. I start at the monthly on anything I've never seen before. Monthly. Strong. Massive base. the volume out for the monthly. Let's drop in an AVWAP from the lows. Yeah, look at that. Clear resistance, resistance. Recaptured it recently. You can see it was resistance here. AVWAP from the highs. The AVWAP gives from like these key levels of all-time highs and COVID lows when I'm looking at a new stock. On the monthly and the weekly, it gives me a sense of like who's in control of that stock, right? So this was a clear rider of the AVWAP too from there. Look at that on the monthly. It's sick. Absolutely sick. Look at that high tide flag. Oh, this is from 2003. Excuse me. This is going way, way back. And it's on log too. Okay. But look at that bounce, consolidation bounce goes to the highs. Okay. So let's zoom in here to more recent times. But it's sick how even from 2003, get that 2014 resistance, the converging of the AVWAP on the monthly, clear resistance, clear resistance, clear resistance, clear resistance. Breaks out. Now that it's over, both of those, buyers are completely in control. Okay. Let's use more recent AVWAPs to get more of a feel for the stock. And then we'll go into short-term moving averages and get a better feel. Okay. That's the COVID lows. AVWAP. Got clear base building here. Okay. Not too relevant. Let's go into the weekly. Drop this in. So strong, it barely even comes into contact with it. Okay. Let's put in our moving averages. Here's your 20. Drop the 8. It's got some nice 50-week moving average interactions. Look at this. Here's your bounce. Here's your bounce. Gets close again. So we'll want to keep that for now. Assuming it's way above its 200. Yes, it is. All good signs. Above the 20 as well. Okay. Let's get into the daily. Which is tighter, 20 or 21? 21 is tighter. I have a feeling it's a 10 EMA rider on the way. There you go. There you go. 10 EMA rider all the way up. That's what I look for on these up. There you go again. I look for multiple instances in the last 2 to 3 years of what moving average, short-term moving average it's riding, and that just gives me a clue as to where I might want to buy it when it pulls back or it's consolidating into a high tight flag. Look at that nice base. 2022. It's probably riding a 5 EMA here. But you get the bounce. Get the bounce, get the bounce, the flush. So that gives me insight. Now 2023. Again, bounce, bounce, bounce again, bounce again, bounce again. Plenty of interaction. It flushes. I'm going to guess that's low vol flush to shake hands out. No, that's pretty much average volume. Okay. If you're in way earlier, though, I don't think you get shaken out here, depending on your stop. At this point, you should have been in way in here if you're identifying trends early. Here's another example, though, 2022, before I zoom into the very recent trend. What looks like another high tight play. I love how repeatable these are over and over. There it is. And another mini one right there. That's the earnings gap ups, their consolidations, the way they act, and how to play them is more new to me. But this high tight flag squeeze into the moving average that it rides historically is like that's my #1 bull play. It's just over and over and over. Volume dry up. Look at that. Massive volume on the way up. Dries up. Boom. More consolidation. Volume drying up. Nice hammer. Perfect bounce. Perfect bounce. Perfect bounce. Boom. Into earnings. Massive vol. Comes down. Undercuts. Bounces. So when I'm looking at the most recent price action, that's sort of like how I'm thinking about it, or how I think about stocks when I'm looking for that tight flag setup. I'm also looking for a double cross going upwards, the 21 or the 20, as well as the 10 EMA and or the 8 DMA, because that gives me more confidence that it's going to be an actual uptrend. See here, obviously it's riding both. Lowest time frame above the mid time frame, above the longer time frame, and I bet you the 200's like this. Same thing here. No reason to ever buy it when these are curling downwards. Just no reason to be forcing trades like this. Recaptures it, 50. You can see it's got interactions. Here's your cross. This is when I would be getting interested in this area in the last 3 weeks. So it's crossed, knowing how it's acted in the past couple years from a trend perspective when it's trending upwards. Want to look for horizontal levels of significance, right? Meaning how do areas where it interacts over and over. You take that out. 40 level. And they're usually around like round psychological numbers. 40 level, 40 level, it flips. Again, here's a 40 level right there, right there, right there. So just an area to watch or keep in mind. 40 bucks. Okay. Not as much respecting its 10 EMA as it is its 21. Again, there's the classic setup. You can see it. Here's your one low. Here's your second low. Higher low. Here's your third low. Perfect bounce. As what I was talking about before, I like to buy it as close to the moving average that it's respecting as possible. and that allows me to get a super, super tight stop on a close below it. And I usually end up having to wait 2 or 3 days before it actually breaks out. I guess if you want to put one here as well at the 41. At this point, I'm not even looking at it up here. Once it's broken out here, it's too late for me to get involved. Let's take a look at our 8, bring our 10 back in play. Get rid of this. Yeah, I mean, it's a mini base. Whatever you want to call it. Little base, double bottom. It's a key level here. Again, this 39 level. 3880 to 39. You see this is going all the way back. You see that? Resistance, 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 38.8 over and over. Testing now. The algos they're testing it again as support. 38.77, 38.7, I guess, or 38.8 to 39. Right in that area. Even going back again, right in that area. And that's where I'm trying to buy. Obviously, hindsight, but when you look at past areas of like where the algos are putting in, where there's clear resistance, on the flip, you can use that to your advantage when it's tightening up like crazy. Right? So like let's say I put in one here, 39. Boom. Clear, clear resistance. I mean, just over and over and over and over and over. Again and again, the interaction. So you could have your buy order in this range on a limit order, 39.5 to 39. And it's not on an undercut either of support, if that makes sense. And that's usually how I try to enter when it's tightening up like crazy into the moving average, and it pretty much looks like it's going to go. Imagine you can get a buy in here, right? And you're sitting tight and you're waiting. Give it a couple days. And I'm still tweaking my own trading system as between, I seem to go back and forth between like a hard number stop, right? Because a lot of the times you'll get stopped out on a liquidity grab, which is why I think it's so important, like midday versus like a close below either a horizontal level of significance, like a close below 39, or a close below a daily close below a support. I seem to like toggle between those two, so I'm still figuring out what works best. Um, over the last like 6 months to a year of trading, but I think if you're using a daily time frame, which I find myself trading purely on more and more over the last 2 to 3 years, um, the close below the horizontal level of significance or support, or the close below the moving average, has saved me quite a bit uh, versus uh, like a hard close number that's in the system where I'm just going to get stopped out, if that makes sense. Right? So like if I'm going to put in a hard stop into my brokerage, I'm going to want to be looking at like where the, like here's one low, right? So here's a low. If I'm looking to put in a stop loss, if I'm looking to enter in this region, 10 EMA, take that out. I would be trading with the 21 EMA if I'm looking for entry here. I would have been putting this in here while it's tightening up. If I like, let's say I found it on my scan, horizontal ray is there at 40, right? So it's a clear trading range for almost a month, 3 weeks straight. I would have identified that this is a key area of significance. So I'm going to be looking to buy as close as possible to both the 20 EMA, 21 EMA, as well as this horizontal line of significance. So I'm putting in a limit order. I never market buy, ever, when I'm trading on the daily, ever. Unless it's options, and then I would get I would put in like an alert around 39.5, 39.4, 39.3, lets me know it's coming in, and then I would put in a call buy order for at least a couple months out at the money, maybe even 6 months out at the money. And then I would be looking at, okay, where are my recent lows? We have a low here at this level, right there. You have a low again, right there. So if I'm going to be putting in a stop that isn't a mental stop on a close below this 39 key level, where again, this entire time you can see not a single close below it, not one. It undercuts, but it doesn't close below. And these are just liquidity grabs and they're taking out stops clearly. So I would have put in, at minimum, my stop would have gone in below here, right? So I would have been entering in this range between 39.55 or 39. At the time we didn't have this data, so you would have had this data to work off of. At most, I think we can use a replay function, right? So with no hindsight, right, this is all we've got. And I'm looking at this and I'm thinking, okay, so the 20 clear of resistance here, the 21, resistance, resistance, resistance. Recaptures it, tests the support. I've got this horizontal line. Here's my range. Very clear range, false breakout. Comes back down. I likely would have spec bought it at 39 with a limit order. And I actually probably would have had a limit order here. That never would have gotten filled. But the way to play it would have been to have an alert here, 39.2, 39.3 area if you're interested in getting in. You want to see, instead of blindly, like I guess my process of doing the best way to do it would have been, you want to see how it's going to interact yet again with this 39 area. You have an increasing support line here. Take a look at your 50. Yeah, so your 50 is starting to curl up. You would have had your 10 EMA as well. Yeah, so I probably would have bought it here. And kept a close eye on it. Where would have my stop have gone? At minimum, my stop would have gone below here. So the low is going to be 38.42. I like rounder numbers and I like to give it a little bit of room to breathe. So at that point, if I'm buying here or here on any of these days, If my stop loss is here, it's going to be right at support, and I don't want that because it can easily get flushed there on a liquidity grab. So that's why I say a close below the 20 would have made me feel much better with a mental stop to sell if it for some reason is going to flush, right, as it comes down. So at minimum, I would have had 38.25 as my stop loss. Again, I want to give it room to breathe and try to avoid getting stopped out. Puts in a higher low. On this day, I would have sold a third. Right, so I always try, when you think about your risk, let's look at this ADR. Very, 3% is a bit low. I try as much as I can in my system uh, of where I want ideally my stop loss to be at most 50% of the daily ADR. When you've got a gap up like this, it's not as reliable. Um, but whatever my stop loss is on on a cent basis, a cent per share basis. So like again, let's say I entered at 39, for example. Enter at 39 on any of these days. My stop loss is going to be right here. Entry at 39. Stop level is going to be 38.25 potentially as I'm scouting out the trade. Do the quick maths on that. That's going to be 0.75 75 cents stop loss divided by 38 is going to give me 1.9 or 2% stop loss on a percentage basis. At that point in time, your ADR was on any of these days at 3. So it meets the criteria. Let's see, 2% now. So it would have been about 0.66 or 2/3 of the ADR. Not ideal, but I'll trade it and I'll buy up to a 1-to-1 ADR risk. Any more and it starts to get out of whack. So I entered the trade at 39. Stop loss is here below these lows to start. I would have noticed that this was a higher low. Once it's at 2x my per share risk, right? So my initial risk would have been 75 cents per share. Once it gets to 2x or it goes up and it pops 150, I'm selling immediately and I'm putting in a market sell or a limit order sell for 1/3 of my shares. Why am I doing that, right? So my initial risk is 2% or 75 cents per share. If I'm selling 1/3 of my shares, I'm looking to free ride or free roll my entire position as soon as possible to completely pay for my risk. And hopefully, I'm going to be part of a much larger uptrend, right? To where I'm riding 2/3 of my shares for free. It could be a week, 2 weeks, a month, 2 months, however long it is, right? That the trend lasts. I would have actually gotten filled on this because your high of the day was 40.51. So I would have been free riding. My stop here, I would have kept the stop. Now, instead of losing 75 cents per share on a three, let's say it's a 3-part position, right? Now I have 2/3 of my position. If I get stopped out at my initial area or my initial stop loss, which was 75 cents per share, I'm break even. It's a complete free ride. So at that point, all of my risk has been mitigated completely. My next stop or my next step is going to be looking to move up my stop loss as soon as possible as I see this start to gain legs. So at this point is when now I know I'm riding for free. Let's go into the next day. I see it bounces on that next day. Hard bounce. Right, so I see it's gaining traction. I'm going to be moving my stop loss up to here, to this level. 1 cent below that. So now my stop loss on 2/3 of a position is coming up to 38.5 instead of 38.25. So what does that do for me? That means now I'm guaranteed profit no matter what. Even if I get stopped out, I'm going to be making on those 2/3. We were break even at 38.25. We're now gaining 25 cents per share on that 2/3 position with that stop. As this is curling up, and I see it's now retaking this 10 EMA. Now I'm going to get more aggressive with my stop, right? So this is the point where as it's starting to gain buyers, this is where I'm going to be thinking about, okay, several up days. It's up 20% almost, or it's up over 10%. I've got 2/3 of a position that's free riding that I'm still holding. I haven't sold anything else. I'm not going to be a guesser and try and prematurely take profit, say it's good enough. The reason for that is because I play typically with as tight of a stop loss as I can. I expect to get stopped out quite a bit, right? And I play with large size and I try not to risk more than I would say like half a percent of each account that I'm playing with, or whatever account it is that I'm trading in. You want to ride your winners, right? They say that, and it's a lot harder to just sit there with with sitting on your hands and not to take profit. But once you've mitigated your risk completely and you have a system behind like at what point do I let the market take me out on this free roll, it's extremely freeing because I don't have to be by the computer. I don't have to watch the position closely. I can go about my day in other trades, do whatever it is I want, and not baby the position anymore. So at this point, once I see it's recaptured this as support, I'm gonna be setting my stop at the low of the day each day. Right? So it's recaptured it here. Very likely on the 27th, I would have moved my stop up here to 39.5. I may have waited an extra day just to make sure it's not a fake breakout and stops me out. But look at this low of the day, low of the day, low of the day, low of the day again, low of the day again. Or, and I typically use the low of the day strategy on stocks that are moving up really, really aggressively. On stocks that aren't as much, but it's a clear uptrend, uh, I'll just keep a mental stop and I'll have an alert in for like I'll just want to let it ride the moving average, right? So the 10 EMA clearly recaptured, respecting it, it's launching. 20 EMA, you've got support. This is just curling. I think it's going to be, this looks like it's gaining some legs and some traction. And on that weekly, that was a massive weekly candle. So those are the two ways that I let the market take me out, but I wouldn't be entering at this point. I might consider it on a pullback to 41. Right? So look at this. 41, 41 interaction, 41 interaction, 41 interaction. This is just personally. If I'm looking to enter this trade. At this point, I'm waiting for a pullback. I'm not going to speculate and buy it here, or here, or here. At minimum, horizontal area of significance. The reason I wouldn't speculatively buy it here on an 8 DMA, on an 8 EMA retest, is because of how choppy it's been in the past with it, and even on the way up. Right? Undercut, it's choppy, out of bounce, lost it, choppy. First area I would be looking at it is at 41. If it undercuts, I'd definitely be looking at how it interacts with this. Right here in this range. The 20 DMA is going to be coming up though. Even if it comes down over the next few days. Excuse me, it's the 21 EMA. Each day as this comes up, it's going to be getting a little higher. I'd be looking at to where this is in the next couple days. And it could very well be that this 21 EMA, all of a sudden, now it's an area of confluence, right? With 41, horizontal line of significance. And then that could be a nice buy. Let's see how it might look on the weekly. Could very well come back and retest this level. Look at that. You see that? I had the 41 in here for just those few days, but if you extend it, I'm not surprised that that was a prior high from January. Boom, 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 breaks through. So that's just one scenario where I would, that's the scenario and how I think about it step by step. As I'm entering a trade that's like getting really tight and the high tight flag with either the 8 or the 21 coming up for support. On the weekly, again, that just sort of further cements in my mind my thought process of how I would look to enter on a pullback to test this breakout. And then I'd want to see it come down, bounce, and then the following week it could put in it could just go and I would just never be part of the trade, which I'm fine with. Could completely pull back this week. And then the following week, you'd want to see how it interacts. Maybe it collapses, not likely, or maybe gets a hard bounce. Who knows? But I hope that's helpful. So That's my thought process. Over the years, like 9 years into trading, I've less and less been using shorter term time frame trades and been day trading less and less unless it's like a absolutely killer setup. So here's an example of a day trade I took recently. It's on my Twitter too. Um, and if I'm not sure if you're familiar with ADR, the average daily range of the stock, right? Meaning on a percentage basis. Oh yeah, this looks good. Um, on a daily basis, what is the average over the last 20 days? What's the average percent that the stock is moving? It just doesn't make sense in my mind to be setting stops that are greater than the ADR or the average amount or the average percentage that a stock moves per day. Your risk is it's the risk to reward isn't that great at that point. But yeah, I mean, this is a beauty in the past. Look at that. High tight flag, tightening up, respecting the 8. Nice. Tesla. I had a fairly sized position in Tesla on short term calls recently, this past week actually. I've been riding Tesla though since mid May on shares and TSLL the 1.5. It's no accident that this is riding the 8, and looks like it's. I don't have a 5 EMA or DMA. I don't use. I think that indicator is too tight for me for my liking, but that's what. If I had to guess, that's probably what it's riding on the way up. But again, 8 DMA or 8 EMA. I keep saying the 8. I used to use the 8 until the last few weeks, and I switched from the 8 DMA to the 10 EMA. 8 just gives it a little bit more room to breathe from a support perspective. There are less undercuts on a daily basis, and that kept throwing off my trades, entries, and stop losses. But I use the 10 EMA, the 21 EMA, the 50, and the 200 DMA, and I always use relative strength. These are Bollinger Bands. I've been using. I think I'm going to take these off soon. I've been using them less and less over the last year or so. But when I see the 21 EMA and the 8 DMA making a cross of the 50 on authority, and you see a few days that they're gaining, right, like they're gaining traction, and it's not just going to be a fake out like here. Well, this wasn't a fake out, but here's another instance. 8 EMA crosses first, clear uptrend. At this point, you're probably already too late to get in unless you're day trading, but it's a clear uptrend when you've got that first cross, second cross, crosses over the 50. I just like to use that as almost like its own breadth indicator, right? Like this is in a very clear, longer term uptrend that could last weeks going into months. But I was in Tesla in this. I was actually in Tesla in this range here, and I still hold shares as well as TSLL. And I've been just playing around with short-term call options most of the way up, just buying and selling. That said, Tesla, what was the setup? Right here. I really got to find a new 10 EMA indicator that works. on these shorter term time frames. This was a cup and handle. You could call it a cup and handle right here. You could also call it a nice bull flag, tightening up very nicely. This is where I entered. I nailed this bottom. This is why over the last few years, and it's crazy to think it took me so many years to finally nail down this concept of these short and long term horizontal levels of significance are equally important, if not even more so, uh, than any sort of lagging indicators. MACD on short-term time frames, useless. You can't trade off it. They're lagging. RSI, completely useless. Because, again, lagging indicators, they don't give me any idea as to where the stock will go. The only time I will look at them is on monthly, if there's a potential upwards or downwards monthly cross. That might give you a little insight as to what the longer term direction of the stock may go. But again, that's only going to fill out and populate after the stock has already had a full month or a full week of trading. So price action, candlesticks, knowing all your candlesticks, knowing all your patterns, took me years to learn and get really serious about. Look at this right here, going all the way back, 254.50 key level on a shorter term. Can delete this, and so that gave me a really good 254 to 254.50. Gave me really good confidence to enter on those calls last week. Look at that. Put in another one. 254.5. Right here. Boom. Oh, I think I might have put that in wrong. That's tight. You could even make it a little less tight and put it in at 255. It was phenomenal risk. Even on a share play, it would be perfect. Risk reward. So look at this. Since that gap up over the last 3 weeks, key area, clearly. You can see it again and again. Found support when it flushed. They grabbed liquidity here. Look at all these liquidity grabs in this area. This was a gap down. So when I saw this, didn't enter here, didn't enter here, didn't enter here, didn't enter here. Sometimes I use the 5 DMA. Look at that. On the 30-minute is when I use the 5 DMA only. Look at that. Clear resistance, found support there. But was it finding support at the 5 DMA or was it finding it at the horizontal level? I think it was the horizontal level, and that's what I'll take more stock in than any moving average. So they punished chasers on this gap up. You see that way too often. You come back, clearly there's plenty of interaction here with support, support again, support, resistance, it flushed through. This horizontal line, clearly resistance, resistance, resistance. So it was an easy sell on Friday to get rid of those calls on the gap up. I didn't expect it to gap up, but I did expect it to go up and play out. Plenty of times where I'm completely wrong. There was a high tide Google flag I think last week that I didn't enter, but it was a high tide flag into a 5 DMA on the 30-minute, where instead of gapping up over it the next day, it just completely collapsed. It did recover, but doesn't always work out, which is why um, I don't like holding options overnight too much unless I'm able to buy them early in the day and gain some measure of like seeing the stock go up, and I'm able to sell some of it, reduce my risk at 2x my sell 1/3 of my calls at 2x my risk, and I've essentially de-risked the entire position. Plus, I never buy calls that are out of the money, always at the money. I try to give it at least a month. Weeklies and bi-weeklies, there's too much decay, too much fuckery that goes on gap down, random gap downs. Okay, so how do I make this play? I bought calls at 254.60. That was my entry. After move here, you saw that was a cup, potential handle. I had only thought of it really as a bull flag. I was trading in and out here with buys in this range and selling here. That's the only time that I would ever play weekly and 2 to 3 week calls. Is if there's a clear tightening range, I'm able to like identify what's the key level of horizontal significance. Is it trading above and or near the 5 DMA? Is the 5 DMA trending upwards? Meaning, is it like catching up after a big run? And I would be buying calls in this range, selling them intraday into resistance. We saw this was resistance and support prior, so pretty dependable area to sell. Could even sell them here. This 250, 650 range. If you're playing weeklies, that's where I'd be selling. Buying in here, 254.75. Getting as close to 254 as I could. Selling them same day and rinsing and repeating it. I also like to put in anchored VWAPs on the lows of recent trends. Look at that. It's catching up. Why is this significant for me? Because it tells me that this could be potential support. So this is one thing I'm looking at. If this flushes, I think there was Tesla news today. Haven't looked yet, but let's say there was no news. It opened up here, comes down and flushes, fills the gap. I'd be looking for entry here, potentially. Why? Because buyers are defending, potentially defending on this uptrend. And I never buy support. I always wait to see how it interacts with support, horizontal or moving average, and then I'll buy it as it's bouncing off and then set the stop mentally or put it into the broker. But I think buying support, I've been burned plenty over the years, where even if it's interacted as support in the past, you just don't know. Could be a random gap down. There could be news. Something like, God forbid, some sort of war comes up or some sort of banking crisis. Bank goes under, you just never know. And nothing is support until it proves itself as such. Just my opinion. Brian Shannon, he's a great AVWAP. That's sort of his own. That's his go-to strategy. I incorporate some of his uh, own learnings or his own teachings into my own system. Look at this horizontal line here. It's just crazy how accurately the algos will bring these levels to. Look at that. Perfect bounce. 259.9. Oh no, what's your low? 259.9, your high. 259.88. I mean, that is not by accident. And the more like over the years that I train and I look at charts on the weekly, monthly, daily, shorter term time frames, like after a point, it's just a no brainer for me to be quickly coming into the chart, charting these levels, buying these at will, and selling it at the nearest line if I'm doing intraday scalping with calls or uh, in this instance, I bought them. Got to check again. It was either a week or 6 weeks out. I bought them. I wasn't sure how long consolidation would go on, and it could have gapped down as well. So I wanted to give myself some time. But I bought in this range, held on to it, gapped up. I sold it in this range here, I believe. I didn't nail the top. And then I put out another Twitter post. My Twitter's grab the bag stocks at Twitter or at grab the bag stocks. And I mentioned that this could be another potential flag setting up. Going to the 15-minute here. I wouldn't feel as confident, but it was potentially. Looks like this is turning into a head and shoulders actually. No, it wouldn't be. But it would be. Looks like it's rolling over. Look at this on the 15-minute. The way it interacts with 263. Look at that. Bounce, bounce, undercut, bounce, bounce, flush. It flips, flips again, bounce. It can't break through. Finally rolls over. Tests as support. Tests the old support as resistance. Does it again, and rolls over. And I think this was. And I mean, that's. I guess you could even call it, if you go into the 5-minute, a mini bear flag, right? You can put that in there if you want. Easy flush. And it's end of day on a Friday going into what's going to be material news on Sunday, which is a complete gamble and crapshoot. You don't know how the market will react, don't know what the numbers are. I don't bother looking at media. So there was no way I was going to hold calls through the end of the day. And I always like to sell into strength as well. And I don't worry. That's only on calls, not on longer term swing trades. And there's going to be inevitable profit taking. So this is no surprise. It should be expected. Once this lost support, tested, had that little mini bear flag. Probably, I bet you it's much more pronounced on the 3 and 5-minute. Nice flush. Tests one more time. Sellers get out. And boom. So I wouldn't touch this. Likely won't be touching this tomorrow. And it's a short day. So I won't be trading at all tomorrow. Let's look at the chat. 9 years, Casey. I've been trading. But I would say only really within the last 3 to 4 years is where I think over time like I've read all of Minervini's books on investing in long-term swing trading. Uh, I've read Brian Shannon's AVWAP books. I've got a ton of different William O'Neill, right? The Can Slim stocks, making sure you're only trading those stocks that have excellent earnings, excellent growth, forward-looking earnings that are dependable, leaders in their sector, only trading the leaders. Uh, and I always also look for the actual ETFs that have these leaders as their holdings, right? So I trade those, and then I also am always looking for manually those stocks that super innovative, a clear product, could be a niche market, could be an emerging market in the US only, that are growing exponentially, uh, and it's clear that they're gonna like have an explosive future, right? So like ENPH, ENPH is one of those. Celsius, right? Awesome, awesome, awesome business. Monster. I mean, these are just like those are long-term holdings that and current market leaders that if you're able to identify them, you don't even have to identify them when they're trading for $2 10 years ago. Look at that. I mean, market leader. The older I get, the less I trade on. I don't trade off 1 minutes, 5 minutes, uh, less and less 15 minutes lately. 15 minutes I'll only trade if it's intraday call or put scalping. 30 minutes for 1 month to 6 week calls and or puts. Like for Tesla, I was zooming into I was using 15 minute. 1, 3, and 5, it's just there's too much noise there for me. My biggest holdings and my biggest positions um, are for moves like this, right? Like I've been in and out of Celsius, but the idea and where I think the maximum gains are is you're getting in relatively early. These are AVWAPs to stocks to where they're within the parameter. Look at this. Uh, Look at that inverse head and shoulders. Left shoulder, head, right shoulder. Boom. Awesome earnings. Comes back. You can see the volume here. It runs. I also only trade within my own system, right? So what's my bullish system? I'll pull up Apple now. This falls within one of my 3 to 4 areas that I trade on a bullish side. So before I go into Apple, Enphase. Chart's broken for now. Looks like shit, but it actually could be turning. And I have ADHD, so sorry for all the jumping around. Helps and hinders trading for sure. The reason, so before I go into Apple, the reason, look at this, it's following TAN. ENF is a big holding in TAN. Weekly, quickly, the reason I don't think that all is lost yet in ENF, SCDG, which is another solar and fuel solar, is that TAN, which is the Invesco Solar ETF. Sorry, I'm on a slow laptop. Look at this setup. Doesn't necessarily mean it'll work out. It could completely roll over. But look at this. I mean, that's a tight setup if I've ever seen one. And you have an inside week, so you've got a bullish Harami. Look at this. Inside bullish Harami week. 3 higher lows. Oh, excuse me, no. No, you do. You have higher lows here. I don't trade ETFs. I probably should, though. 3x ETFs would be fun. But if this can break out, I'm sure I can make this a little cleaner. There you go. Not all is lost on solar. Has to break out though. So I'm not a buyer of Enphase. I have a long-term holding. Been holding for many years, but I'm not trading. I would be trading Enphase or any solars until I can see this tighten up further and get a potential breakout. I would want to see a breakout, uh, a test. So that's one of my bullish, that's in my own personal trading system. The bull flag breakout, it tests the prior support or resistance term support, and you buy it immediately as it's launching out of the hole. Right? So what do I mean by that? I promise I will get into Apple in a second. But this is one of my most profitable trades this year. And I'll walk you through it very quickly. Select medical. A liquid stock no one knows about, cares about. But I found it. No Twitter posts on it. Nothing. I think I saw one. This, I mean, what a chart. In the weekly. Here's your low. Here's your low. This is a perfect VCP setup. Mark Minervini VCP setup. First contraction. Here's your base. You could consider this whole thing your first contraction. Second contraction. Third contraction. Breakout. I mean, this thing is starting to curl up here. Nowhere near oversold. So I saw that before I entered. Let me pull up very quickly this play. Okay. Here's the play. June 16th, I found it. I saw it. Bounced off the 20. Like, these are the kinds of trades 99% of, or 90% of my trades are now these days, where they're share trades, tight risk. I'm looking for, you know, a longer duration hold instead of day trading. Reduce my risk by selling a third once it's hit 2 times my risk. The stock on a percent basis. Now I'm free riding and I ride 2/3 up easily, completely risk free, and I let the moving averages eventually take me out. So here it was, 20. Here you are trying June 20th. So this is what going back to the tan chart, right? You have that massive sort of bull flag, potential bull flag. So this is what I'm looking for on the tan chart before I start taking solid positions. Starting, or it's trying to break out, clear resistance. Potential bull flag, not a bull flag until it proves itself to be. Broke the trend line on the 21st. This is what I'm looking for on tan. Posted in real time. Broke the trend line, pulled back this morning to test, and it bounced, and I entered. I try as much as I can not to post entries and stuff. I do sometimes, but I just don't like or want people shadowing my trades. And I don't want people asking me for where I enter and where to exit, uh, like repeatedly. I think everyone should come up with their own systems through experience, through studying, through learning how stocks move, as Kalamagi is one of my favorite traders says. And it just comes with years, hundreds, thousands, reviewing charts, learning how they move, and coming up with your own formulas, risk management, risk to reward, etc. High of the day, instant bounce, was already making money. Beautiful. I mean, that's a super powerful candle. Because what this candle tells me is it opened, it went down, and then it pushed back up through the open, and it closed at the highs of the day. A couple days later, trend line, resistance, support flip, multiple retest and bounces, on watch for follow through. This just gave me more confidence in the trade. You've got a bullish engulfing here. There was no real volume though. This was intraday. It was towards the end of the day. I don't add or enter bullish engulfing uh, as as much as I used to. I used to try and do that, but there's got to be a ton of volume in relation to the prior day, and there's got to be follow through. So yeah, the first retest, it went up a little bit, came back down on low vol. Actually, I guess relative, I guess there was some profit taking. It held perfectly. New local high following day. And again, one of those super powerful candles. Open, comes down, buyers step in, push all day. That's what that means to me. Buyers are buying it up, they're bidding it up all day. New local high, you've got resistance there, that candle. Strong close following day, took some off the table. Stops were moved up. Time to sit back, relax, and watch how far this can go. Boom. That was the double post that day. Okay. Following day, got the follow through finally. You saw the volume here was higher than the previous day. That's good. You've got local resistance here, right? So that's what I was looking at, and I hadn't charted it yet because it wasn't quite there. But this is one of my go-to plays. So I went over earlier, I think like an hour or two ago, the high tight flag, where it gets really, really tight with that moving average. Those are like the absolute premier. That is my bread and butter, best swing trade, and it just works month after month, year after year, again and again, and you just gotta find them. Whether you're scanning, I have like a database of. I think I've built up my TradingView database to over 1,000 stocks at this point. But every weekend, I go through them really quickly, and I try and find them. And I have a S&P and a QQQ as well as Dow Jones list of stocks that I go through every 2 weeks to a month. Quickly tickle or have them in a, they're almost like a tickler file. Go through them very quickly, couple seconds per chart, and I find those, and I just enter into those high tight flags, tight risk, and they usually pay off and pay big. And if you're able to get them, they usually stair step 3 or 4 times. So if you're able to get in on the first or second high tight flag, you can ride that damn thing. You can ride that damn baby up for 2 months, 3 months, 50%, double your money. If you're in at the money 6 month out or leaps, I mean that's exponential money. Made the nice move right into local resistance on a local volume day. I was a happy camper. Local resistance, boom. Massive volume on a relative basis coming in. So this is my second like bullish trading system go-to. Where do I sell? Where am I wrong? Right? I always have to keep that in mind from a stop perspective. So for me, when it was here, in an ideal world, when I see this starting to pull away in the bounce, you're selling that 1/3 here. As long as it's close to or it's 2x my risk on a percent share basis, because then I'm free rolling at that point, even as it comes back to test. This time I didn't, admittedly. I should have. I think I wasn't paying close enough attention at the time, but it's good that this held. And my stop was below the day here. Low of the day here. Half of it was below low of the day here. Other half was below low of the day here. I think this was Thursday or Friday. And I did take profit into this. Checking the position. I still hold 1/3 of it now. And I think it had a down day. I think it rejected on Friday. So that's my second trading system. The third is just the stair step, right? And that's what Apple is. The relentless stair step. No pullbacks. That's what this is. NVIDIA falls into this category. MACD, RSI, completely useless. In these types, bearish divergence, bullish divergence, useless concepts, especially in these scenarios. Just my opinion. This is your relentless stair stepping, and I mean multiple times it sets up. What also looks like this is, yeah, so that's my second here. I have it as the flag breakout retest. I'm just starting to compile more recently as I'm teaching a cousin how to trade, like all the past perfect setups. Eli Lilly is another example of just like Apple. Clean moving and riding, I guess you could call it. Riding meaning riding it's either riding a moving average or an AVWAP. I mean, just relentless. If you're getting in here, you're just riding the wave. That's it. Which one? Yeah, there. Look at that. It's no mistake, and it is no coincidence that it's riding the 10 EMA. It's not a coincidence. And here's your shakeout. Wick below, shakeout, bounce, comes up. I identified a horizontal level of significance, so I didn't get shaken out on my position here because I saw this. 20 DMA. It undercuts the 20. Is this a 21 or a 20? This is a 21 rider. Held the 21 EMA. Just so happen to be horizontal support. Undercuts again. This is how for a long time, I kept getting shaken out. And I couldn't figure out why on these down wicks. Or my broker just kept shaking me out. And I would see it go up again. A week later, 2 weeks, and I would get pissed. And this has mitigated that to an extreme degree. I mean, look at this setup. Again and again and again. I mean, there's hardly any setup, to be honest. Guess you've got this here. You could consider that. Breaks out. But this is the relentless, the clean moving, relentless, average, moving average rider. And this is the kind of thing I want to be in. Eli Lilly, Apple, Tesla, right? The relentless rider. Chipotle is breaking out. So we'll move this up. I don't trade VCPs on their own, but I find them many times ending up being part of either the A or the A plus or the A tier high tight flag setups. And I don't think that's a coincidence either. But again, look at that. Perfect ride. When you look at the history, again, it's no coincidence. When Eli Lilly lost its 10 and its 20, there's just no reason to be in this stock at this time. Forget the pretty looking candles here for the bounce. I don't want to trade into this, even if you catch a scalp. There's just no point in being in this trade until it recaptures 10 EMA, 20 cross, setting up, beautiful shakeout, and boom. Double bottom, I guess, if you want to call it here, with a neckline. And that would have been your key area of horizontal significance. Right here. And look at that. Bounce. Bounce on the candlestick. Flushes. So that's one area to watch. Another one would have been the price target for the double bottom. I guess the measured move, 330 early on. And look, I mean, I guess it does set up a high tide flag. They just repeat over and over and over. And it just so happens, right, that they're on the stocks that have excellent growth. Look at that. I mean, that's as good as it gets. And a necessary flush. All right, Apple, I think I'm sure has had several setups along the way, but just a relentless moving average rider. I don't know if that was helpful, but that's sort of how I think about it. Look at that. Relentless. 21 EMA. There's just no need to be trading this thing in and out. When stocks do this, you just identify it, you identify the setup. Hopefully, it's going to be relatively early on. You buy the stock, you have your, I'll look at this. Oof, I didn't even see that till now. Look at that base. Take out these. Beautiful base, no? Could even call it an inverse head and shoulders if you want. A deeper right shoulder, which is fine, as long as it's not undercutting here. left part of the base. Here's the head. Here's the right shoulder. You're still not late if you're entering on this breakout. This is exactly what you want to see after a big move. Nice base. So either high tight flag, some sort of inverse head and shoulders, which it was the case here, some sort of double bottom, or even triple bottom potentially. You know, these are the kinds of bases that I look for after big moves. There's a home builder, absolutely relentless. Look at that. I was just trading this one recently because I didn't get in early. Bet you if I put in these moving averages, it's riding one of them. There you go. Yeah, it undercuts the 10 EMA. Undercuts the 20 a bit as well. What about the 50? Yeah, it's a 50 rider. Respects the 50 for sure. Look at that. Nice undercut. Reclaims. Gap up. And since March, I don't see a single tick below the 21 EMA. Not one. Well, I guess here, our single close, excuse me. Since the earnings, not a single close below. I guess you could call that a double bottom with a price target here. Hits it as resistance. Comes back down and it tests this flip of old resistance into support as the 21 catches up. Sets up. Flips this resistance into support and it goes again. I mean, it happens over and over and over, these same couple things. MCK, this is my biggest winner this year. I mean, it's unreal. I've been in this since down here. Since before earnings, I've been in it. And then I trimmed and I traded it again and I'm back to full position. This is the last one I'll go over and I'm going to call it a day. My voice is starting to lose my voice. Hold on. Sorry. Pull up Twitter. But yeah, those are my three main setups. That high tight flag going into those supports. Typically, they have nice ADTs, ADRs, excuse me. Then you just ride it up. Sell off 1/3 to pay for risk, and you're completely free riding a 2/3 position all the way up. Where it goes really steep, you use that sort of strategy, or I use that strategy of setting my stop loss at the low of that daily candle, where it's more just riding or sort of riding the wave of the day of the moving average. I typically won't sell until they either start curling downwards or there's some sort of blow off top and or it closes below them on big volume. MCK, final one for the day. And I have a whole thing for shorting too, but shorting puts, etc. is not popular from a mainstream perspective, so I don't even bother. I mean, here's another bread and butter setup. Shake Shack. Played this. This was nice. Look at that. This is all you need. You can trade this one single setup for the rest of your life and be ridiculously profitable. Ridiculously profitable. Look at that. So my support at my resistance that I was using was this was all-time high AVWAP, I think, which was my perfect resistance. Look at that. Boom. Yep. That's what gave me the high tide flag. Breakout. Respecting the 8. I think the 20 was coming up too. Boom. Breakout. I see even add a little cup and handle here. You see that? Cup, handle. Boom. I'm not selling this position. I did de-risk it, but at minimum, it's going to have to break this trend line for me to be interested in selling. This is just too strong. But finding these, trading the daily chart, and you could even zoom in on a half day, 65-minute charts to nail the entry. I mean, it just happens all over the place, and it's just weird that people don't trade this as much as I thought they would. I'm sure people do, but it's once I saw this and I kept seeing it happening, I just I couldn't believe it. Just over and over and over, non-stop. Cross sectors. This is my biggest winner to date, year to date. I think including last year too. This has been a monster. Monster. This is my first Twitter post, I think. Look at this. Where'd it go? Original post, May 5th. I mean, what a base. Key level of horizontal significance here. Oh, I don't have it on the screen. How do I do that? I'll share this tab instead. Look at this. I mean, it's just key levels of significance. Boom. Resistance. Support resistance. Came down. Really nice base. Two impulses here, 1 and 2. This was into earnings, and I bought it before, and it built a little. I bought it in this area, and it built a little room before earnings. And I typically never play earnings, um, and it wasn't full size. And then this is where the fun began. Massive earnings, instantly hit. Better believe I'm taking profits, as most did as well, I'm sure. And then I just watched it for a bit, back on the menu, bullish engulfing, increasing volume, watching for follow through. This was at a time where I was making a few posts about health insurers before they flushed, like 2 weeks before the flush. And med devices were both having similar looks here to where they were getting these massive bullish engulfing candles on big volume. This is your AVWAP from earnings. Clear support, beautiful flush. Take out all the stops, all of them. Guaranteed. Every stop loss taken out. Boom. I was already back in at this point. When I saw this, I got back in here as it was breaking through a earnings AVWAP. And look at this. Respecting a VWAP. Okay. That was a nice day. And then from here, it was just game over. Boom. Okay, something happened there, but here we are, $30 later, and it's riding the 20, and so am I. And look at that, 50s curling up. I think the 10 is probably there. Yeah, there you go. And that's it. Let the market tell me when it's time to get out. I have no reason to be, there's a, gambling and speculating around, this whole idea of like, I think it's underrated, the speculation of when to take profits and like when is it too extended, and how do I, it's better to take profits, and uh you never lose by taking profits, and all those sayings. I can't remember the exact saying, but you never lose if you take profit or whatever. I much rather let the market take me out and tell me, uh again, through my own stop loss system of closing below these levels, or if it goes parabolic, setting it a little bit below the previous day's lows, instead of trying to guess midday and just being happy, right, with a 20% or 50% gainer or 100%. Right, like who am I to say that this is the top, unless it's been an extreme parabolic run, and but if it's if it's going up orderly like this, like it is here, like it is in Builder, like it is in Apple, you have to come up with some sort of logical system that you can adhere to across all stocks, uh, that makes sense to sell. Like there's just no reason, if you're long here, anywhere here, Why should you sell here if there's a moving average that's catching up and you don't need the money, right? And you're swing trading it from this area. And you see it's been riding the entire time. This flush shouldn't scare you if you're positioned correctly. It just keeps going. So, anyways, uh, that's the end. Uh, and I hope that I hope you enjoyed. For anyone watching, thanks for stopping by, Ralph, as well as Casey. Maybe I'll do more of these in the future. But you don't need to be, and I've been saying it for the last 5 years, you don't need to be a genius to make phenomenal market beating returns year over year. All right, it's pattern recognition, learning how to enter, learning, having your own exit system that makes logical sense and that can be, attuned and used across every stock you trade. So, anyways, thanks for watching, and have a happy July 4th.